Hello, everyone, and a very good afternoon to all of you from Geneva. Thank you for joining us today for the second webinar in the Barclays Bank Kenya series. The topic for today is access to credit. Before we begin, I'll just introduce myself. My name is Kriti Sharma, and I'm going to be your moderator for today. And I'm very pleased to introduce you and welcome our speaker for today, Ms. Susan Situma. Susan is the head of SME banking at Barclays Bank Kenya and brings with her 24 years of experience, out of which 13 years have been in SME finance. In the webinar today, she will talk about the financing needs of SMEs, the key aspects of your business plan, and how BBK's solutions can actually support you. Before we begin, I'll just quickly highlight some housekeeping rules. I request you to please keep your mics on mute so that we can continue without any disruptions. I can see that a lot of you are still not connected to audio, so please go to the top left corner of your screen, click on audio and select connect to audio. In case you have any questions, please use the chat box in the bottom right corner of your screen. You can direct it to ITC Women in Trade or to everyone, and we usually address all questions towards the end. Once again, thank you very much for joining us today, and I hope that this webinar adds more value to your knowledge and to your financial literacy. I would like to give the mic to Susan now. Susan, over to you.
Thank you. Thank you so much for joining us on this webinar. We'll be a series of webinars as Barclays, and this is the second one that we are running under access to finance. And just to give you a preview of what I will cover today, and I'm hoping I can be able to move the slides to the next one.
Sorry, Susan, apologies if I could just interrupt you. There's some disturbance and the volume is very low. If you could just look into that.
Okay, sorry about that. I have it on full. Is that better?
I think you can go up.
Okay, so I wanted to move just to move to the next slide. Sorry about that.
Susan, if you just see the left side of your screen,
yes,
you'd be able to move the slides. There's a slide now. Can you see that?
No.
No. Just click on your screen and look to the left.
All right. Thank you.
Perfect.
Yes,
Thank
sir.
you.
So we'll briefly look at the following topics to be able to address the topic on how you access finance. And primarily the way we thought about accessing finance has been accessing finance through different channels. It could be you want to access it through the bank, or maybe you want to access it through a different source, maybe private equity. The requirements do not differ so much, because the concept of understanding your business and where and what you need the money for, most likely the same documents will be required for you to be able to show how your business is doing. So we'll go through in a nutshell what we review as SME needs, and probably some of the reasons why you might want to apply for the finance, and then go straight into the documents that you need, just giving you an overview, and then we'll go into some of those documents in details in other slides. Whether it's in your business plan, we'll talk about what do you include there. What do banks want to know about your plan, so that guides you into the conversation that you need to have with your bank manager or the relationship manager or whoever it is that you're trying to access finance from. And it also guides you into preparing early for the kind of documents that you need to prepare. Then we'll talk about the acceptable forms of commitment, because the business that you're running is your business. So when that party comes in, they want to know that commitment is there in running the business. So we'll have a look at some of the acceptable forms, especially from a bank perspective. And then we'll just go through the interview with the bank, how you present yourself, just what you need there to be able to have a good first impression. And then we'll go through some of the Barclays SME finance products. I must say that this is Barclays Kenya finance products. There could be some variation based on the Barclays branch bank out of Kenya that you go into. And then we'll just talk a little about, from my experience for 13 years, having run with SME businesses, what I've noticed are some of the businesses that we really end up lending to. And then I think we can wrap it up just around there. So we can get straight into it, and probably as you can keep sending in your questions, which we can address at the end of the session. So from a business needs perspective, you could be wanting money either to pay your salaries or to help you get stocks for your business, which we categorize under working capital. That's the term that you will hear the banks using for what it is that you want in that area. Normally, working capital is a short-term need where it could be up to a year of repayments that you are able to actually get the financing that will help you business running. Not necessarily expand, but make sure it is running smoothly. Then there is business expansion loan, where you might want to take a loan facility that will probably have a tenor longer than 1 year. So you could have it all the way to 6 years, depending on what it is. It could be another outlet that you want to open of your business, or you want to get a new line of business working. So probably if you were selling shirts for men, maybe now you want to start selling shoes for men, and you need to invest in the initial stock to be able to fund that business, and therefore that would look at it and as a business expansion loan, where you need a little more time to be able to pay back or get your return on investment. Then we would look at another category of need, where you would probably be looking into a business mortgage or an equity release, a business where you probably want to put up another premise, or you put up a warehouse where you then need to invest in brick and mortar. That would be a business mortgage loan, and we do offer that over a longer tenure of up to 10 years, times 15 years, depending on what it is that you want to do with the mortgage. We also do, maybe you already have you own already your land and buildings where you run your business from, and you've paid that up, and you want to release the capital that you utilized in purchasing that to expand your business. So we call that an equity release, and we are able to also structure that support to put the money back in your business. In terms of other needs that you could have, it could be in the area of developing your capacity. So probably you want to increase your business tools, whether you want to increase your furniture in the office, whether you want to refurbish, whether you want to buy systems as well. Could be that there are new softwares that are better in managing your business that you want to invest in, that could probably increase the efficiencies in your business. Those are some of the things that we look at in terms of why you would want to then access finance. Or maybe you need to get more employees into your business because your business is expanding. So those are some of the needs that you can actually come to the bank for. Or it could be that you then want, on the last pillar, to get into a new market. So you probably have an office running in Kenya, you want to open one in Rwanda or Burundi. So that again would fall under new markets that you want to scale your business into, and would look at financing that. Or you need to insure your business, which is what I've put there as survival. So if you need to insure, we do offer up to 10 months of insurance, premium financing, where you can be able to insure the assets of your business so that to make sure that should something happen, your basis is covered. We can then go into applying for the business and the kind of documents that you need. So one of the things that you really need to think about, and you need to think about this in advance, I find that most of the times the entrepreneurs think about this when everybody is, when it is crunch time, you need it like yesterday. So you don't even have time to give the bank manager to tell you this is what I need. Maybe you need to liaise with your finance manager to give you some documentation. So it's good to think about these documents in advance. So there is your business formally registered? It doesn't have to be formally registered, but normally if what I've noticed is if there is longevity, if you're going to find longevity in your business, I find that the business that are formally registered actually do better than those that are not formally registered. So it's something to think about. It's not a hardcore requirement when you're applying for finance, but you might find some institutions who tell you that you have to be formally registered so that then they're able to separate the owner from the business itself. So that's something to think about, but it is not a must. Do you have a valid, well-researched business plan? Again, we'll get into the details of what this is, but it's just a good way to understand, okay, have I really thought my business through from beginning to end, and where I want to take it and what I want to do and what I need to get there? That's really the basics around the business plan, but we'll get into that in my next slides. Do you have an active bank account? An active bank account here really refers to an account where you're depositing cash and withdrawing cash. It doesn't mean it needs to have a healthy balance. No, you are running a business and therefore you need to use the money that you are making from the business or generating from the business. All the financier needs to see is that there's money coming in and there's money coming out, because that is what will pay for the financing that you're requesting from the financier. Do you keep any form of financial records? A lot of time with entrepreneurs, I'd have to go into their office to find the sales book, which is the real sales book, not the one that you have that you provide probably to your accountant. There's some things that you sell that you probably don't want to disclose. So that's what I have found. So I've had to go into the business, have a look at your sales book. Those are financial records that you need to keep. Do you keep records of your petty cash vouchers? Vouchers where one of your employees comes to you and they probably need maybe to buy milk every day. You provide tea to your staff. So how do you expense that? Sometimes you'll find those are costs that you probably don't think about, but are actually costs that are important for you to keep a track of, because when you take a loan, you then need to know where is it that I need to probably cut and make sure that I can afford this loan. So those financial records are very important, and we will go through some of them today. Can you offer your own contribution at least 20%? This is important because, as I said, you need to show the commitment for running your business. At the end of the day, it's your business and you want somebody else to invest in it. So if you've planned and thought through what you need, you probably started saving early. So I always recommend to my clients that keep a savings account. Whatever it is that you're making, see how you can save at least 10% of what you're making. And that's what you can actually use as your contribution later when you're approaching a financier. Are you technically qualified for the business? This is a good question to think through. And it doesn't mean that you have to have the academic qualifications to run your business. That's not what that means. It means that you have passion in the business to the point where either you got that from having been an employee in a business that is similar to the one that you're now running, and therefore it gives you the experience that you need to be able to anticipate some of the challenges that would come across with the type of business that you're currently running or want to get into, which is some of the challenges that we find. So you find somebody is currently in construction, but they want to get into transport business, but they don't have any expertise to go into the the transport business because they've just been running construction. So for this technically qualified, it could also apply to the type of people that you have employed into the business. So you have the strategic mind, but the technical mind, you could have already sourced a key resource, a key employee in your business who's actually technically, especially if your business is technical, who then is able to manage the technical aspects of your business. So it could be yourself, or it could be the employees that you then have that are qualified to be able to run that business. So that's an important point right there. It's good to think through that area. And then in terms of just commitment to making your business a success, again, it's about passion and the drive to make sure that every day you're researching how else can I make my business a success. And that will show up in the conversation that you have with your financial, because you will be able to talk fluently around the new developments in your business, the new technologies, what you're looking to invest in the future, but you're not yet there. So it just shows that's really commitment, because every day you're thinking about how else can I make my business better. The next thing we'll go about is what you now need to apply for the business request. So there is a detailed letter just detailing why you need the money, what it will do for your business, and this is really brief. It's really a one pager. It's not anything more than that. Just a letter saying I need if it's in Kenya shillings, you need 2 million shillings. This money is going to get into buying new equipment for me, and you will have even sort of like attached the evidence of 2 million is enough to be able to buy the equipment that you want. So it's important that you detail, and if you have more than one request, so maybe it was this 10 million, 2 million is going to go into equipment, 3 million is going to go into getting additional furniture since you're expanding, and then another 2 million will increase your stocks. It's good to detail out what the total amount of money you're requesting will do for your business in different areas, so that then it's easy to understand and talk about whether that is enough or not. The interesting thing is, because we sit on the financing side, we do get a lot of requests and sort of have a view of what different sort of expenses should cost you. So if you find a good banker, they'll be able to tell you, okay, if you're paying 2 million for this type of equipment, I got a different request where a different company is providing the same equipment for maybe 1 million. So it's a discussion area where if you find a good banker, they can refer you to somebody else, because we see that a lot of requests every single day, and therefore are able to advise you well on whether that money is enough for what you want to do, or you don't, or you need to probably provide a little more for it. So that's an important area. And then your business plan or profile, just what should it include? Details of your core business. I believe if I do have some Kenyans on listening to me, and we know how we incorporate our businesses. Sometimes we say that we can do everything and anything under the sun, and therefore, for your banker, they want to know what's that core business right now that you are doing. That's very important for us to understand, so that then we know how to solution for what you're currently doing. Your ownership structure details should be in your business plan. This is an attachment that you give along with your request letter. So you'll have this profile where you have the ownership structure, the owners' profiles. Probably this just gives credibility into what they've done before, and therefore why this business is going to do very well. And then just a track record. I have done previous contracts before, or previous work before with, for example, Facebook, or I've done it with DSTV. Those are track record of who you have done your business with before, which also gives your business credibility. And then talk about your suppliers. Who are your key suppliers? Who are the key clients that you have? And then what makes you unique in the way that you deliver your service or your product? What makes you unique? It's important that that you've understood what differentiates you from your competition. And that comes together in an attachment. And I know I will touch a bit about this business plan and what gets in there with a little bit more points. Then the third point is, at least your business, you should have run your business for 2 years. I've put an asterisk on this point because sometimes as women, we start the business in our homes just as a good idea or a side hustle. And at that point, you start receiving money, but then you formally decide to start getting into it probably 3 years later. So when it says minimum 2 years, it means from the time you started the business, not from when you registered the business formally or when you started taking it very seriously. We normally would just want to see the track record for 2 years of you having run the business. So it's an important point right there. So it's good to start keeping records from when you start doing business, because that gets into the number of years that you've run that business. And then the business formation documents, these are really the legal documentations that you've used to form your business. It is more as evidence because you already said these are the owners of the business in your business plan. So the formation documents are really to validate what you have put in there. And depending on the type of security you give the bank, then these documents become critical because they are legal documents that will be used to facilitate the process. Identification documents for the directors, again, your identity card, your PIN certificate for Kenya. That's important because for you to own anything, there's some legal requirements there in terms of identifying yourself as a director. Copies of previous and current contracts. So this just shows you have a good track record, and you've always performed on the previous contracts that you've had, and currently you have the following contracts that you need to service, and some of these current contracts could be the basis why you're looking for financing. So important to keep a track record of this. And just a note that if you don't have a formal contract, it's okay. I think the most important thing is to document the business that you're having with your clients. Even if it's on an email, that is good enough to show that there has been business running. And that's why it's important to have formal email communication with your clients where you can also provide as running business. Because some clients might not want to sign a contract with you. It's not in their policy because they have ad hoc requests of goods. Maybe you supply computers, so they'll just call you and tell you, I need 2 computers today. So if you can document those conversations, they double up as contracts when it comes to providing proof of the kind of business that you're doing. Then financing above 30 million shillings, this is really for Barclays Kenya. We normally would not ask you for audited accounts. However, it's good for you to have some sort of documentation to validate, are you making a profit as a business, or audited accounts. So for businesses that are looking for 30 million and above, we will ask for audited accounts and management accounts. And for businesses that are looking for less than 30 million, we would use your financial statements, whether from a bank or your M-Pesa records or your SACCO statements, to be able to show where the money is that can be able to help us analyze how much your business can afford. The next point there is around the Credit Reference Bureau report, which needs to be positive. In some cases, it is not positive, and I do understand that entrepreneurs at some point, especially when they're starting off, it's a bit hard, and you could maybe lose 1 or 2 payments as you financed your business earlier. Mostly what I find in Kenya is probably you had a credit card debt earlier that you used to start off your business, and then at some point you couldn't pay it, and therefore the bank could have listed you for one reason or another. The most important thing here when we say clean is that you've gotten into an agreement with the financier that listed you on how to pay that debt. So it's not about you don't have a debt. It is possible to be listed and you have a debt, but there is a record of how you have agreed with the financier that you're going to pay off that debt. And it could be one of the reasons you're also coming for financing is because then you want a little more leverage in terms of tenor that you can use to pay off that debt, that then you're coming for financing. So important is uh, the credit reference bureau report is showing that they would normally give you a letter that shows you have an agreement with your financier, and you even have a statement showing that you've been making some payments. And then the last point there is about your loan contribution. If I can move on to the next slide. So in terms of documentation used for facility assessment, I've talked about the registry documents, the memorandum and articles of association. In this document, you will find the borrowing powers. So if you're formally registered as a limited company, there needs to be a clause in there that you can be able to borrow. And it also shows, especially where you have more than one shareholder or director, what forms a quorum for you to be able to borrow. Sorry, there was just some interruption. So it's that's why that document is necessary for us to be able to see that your company can be able to borrow, and legally it can borrow. There are companies that are formed that are not for borrowing. I find that in some of the trustees that are just receiving money and not necessarily to get into the business of borrowing for the business. So it's important that we see that document. Certificate of registration, it's just an identifier if you're registered, that this is the name of the business. In terms of compliance documents, it's the latest annual returns. In Kenya, we are required to file annual returns if your business is more than 18 months old every single year. And therefore, this is part of the compliance documents, and you would have it readily with you if you are filing the returns. And then there is the business licenses or permits. This just shows that, especially if you operate in the central business district, that you have a license to run your business, which is important. In terms of financial information, I've talked a little about that, and probably get into the point 2 of the financial information, where you have customers that you are giving credit to. You give them credit days to pay you. It's important that we understand how long is the money out with them before you collect it. So is it 30 days? Is it 60 days? And that's what I mean by aging structure of the outstanding receivables. And the same for the payables. You have payment terms that you've agreed with your suppliers, and we just want to make sure that you are keeping your promise of when you're going to pay them. It's okay for you to not pay your suppliers for longer than what you've agreed. However, important that they don't cause a concern to us where they will stop doing the supplies to you, because that therefore means your business is at risk. So that's why we would want to see the document of how often are you paying your payables? Are you on track? And if you're not on track, you probably have made new arrangements with your suppliers. And then the last point there is around your projected cash flows, showing in the next 1 to 2 years, this is what I expect to be what I can be able to generate as business. And that supports the financier in being able to plug in the amounts that you need to pay for the facility you're requesting and confirm that you can actually afford to pay. This actually also helps you just think through, can I afford this loan? Because if you do it on an Excel worksheet, and it's a very simple worksheet, you'll be able to see if I plug in a repayment of 30,000, I probably can't afford that loan. So maybe I need to adjust my needs, or maybe wait a little longer, or increase my contribution so that then you can be able to afford what it is that you want to do. From other financial institutions, important that if you already have a credit facility with another institution, that you come with the facility letter for us to see the terms and conditions that that facility was issued. In some financials, they could say that you're not allowed to go to any other financier, which would mean you can't have two financiers at the same time. So it could open up the conversation around buying out the facility from the other financier so that then you can have better terms with the current financier that you're negotiating with. The other one is around the bank statements. I do find entrepreneurs have more than one bank. So important that you bring all the bank statements from all the other banks where you bank, because we consolidate that and are able to see the amount of facility that you are able to repay. I did say we'll talk a little about the business plan, and I'll talk about the business plan in 3 areas. Where you are now, where you want to be, where you intend to be, and how you're going to get there. So it's just 3 general sections that you can define your business in. So where you are now, think about the outline of your business. How are you currently doing? What are your current capabilities and capacities as a business, right? These are the kind of sales that you're currently doing. That's where you are now. The location of your business premises, important to include that in there. Your products or services, what is that you're offering or selling or offering as a service? The market you're operating in, important. We do talk about the strengths, weaknesses, opportunities, and threats that are currently there in the business that you're currently where in terms of where you are now. Important to think through that and have that documented. Who are your current customers? Yeah, important to just take stock. It's taking stock of what is currently happening in your business. And it could be that in terms of where you intend to be, you want to expand that customer base, which will then go into that section. Think about who's your competition and why are they your competition, right? So I give a good example for banks. Sometimes I say, I mean, for mobile lenders are really our competition. So we've got to think differently around how it is we lend. Chamas are competition to banks. And I'm just using these examples to help you broaden your thinking in terms of who is doing something similar to what you're doing. It could be in a larger scale or smaller scale, but you do see the threat of them being able to scale and interfere with how you're running your business or eat your lunch, so to speak, in terms of your business. And then in terms of your staffing and equipment, take stock of where you now. How many staff do you have? If you're a construction company, you'll probably be having a list of all the equipment that you currently have. But that is also true if you're running a beauty salon. This is the current equipment that I have. And it's important to document all this, as it gives your business credibility in terms of where you are now. And it helps you think through probably where I need to be. I need to be adding 2 or 3 more other pieces of equipment because of the different areas you want to get into. So that's in what you need in that section of where are you now. Then we go to the next section where we talk about where you intend to be. And it's really around your future business goals or objectives. So I could be having a sales turnover of $3 million, but in where I want to go, I need to double that. So it helps you think through what is that then that I need to be able to get to $6 million of sales. Outline of your request. It's part of where you intend to be, and this is really details around how you intend to in terms of where you intend to be. How are you going to get there? It will be, these are the requirements that my business has right now. In terms of employees, how many do I need to employ for them to be able to generate the sales? So it could be you're increasing your sales force, salespeople, people on the ground that need to sell to you. It could be you want to set up a new website or make sure that your website is fit for purpose where people can purchase online from you. So outline of your request is in the sense of what you need to be able to get to where you intend to be. And then why you need the finance. So that's again thinking around where you intend to be. If I can go to the next section of your business plan, it's how to get there. Do you have a marketing plan? it's important that you put in money in terms of is it digital marketing? Maybe you need to increase your data bundle usage and provide the same to your salespeople so that then they can be able to market more. Or you need to be sponsoring certain activities that can help you drive your business. That's all part of marketing. So important to show that you've thought through your marketing plan. It could be changing the layout and the design of your menu if you run a restaurant. So you might want to use some marketing materials there, or you want to start giving some offers, a happy hour sort of, if you're running a restaurant again. That's part of the marketing details of the marketing plan that you just need to put in there. And then additional resources required. I've talked about people, I've talked about equipment, I've talked about different softwares. Those would be additional resources you need, or furniture. And then your contribution is more around what can I bring to the table for me to be facilitated to get the finance that I currently need. And then the financial information, which I've talked about. If you have a very good account person, or you do have one of these, like for example, QuickBooks or Sage, they do have softwares where you can be able to plug in your financial information, and it can remove as an output your profit and loss that is projected, even based on the cash flow projections that you then make. And the reason why these are important, it shows that you have thought through all the different elements that you need. And then appendices here, we're really talking about recommendations. It could be recommendations from your clients that have said you've really been providing a quality service to them, so they can give you recommendations, they can give you accolades. It could be awards that you have won as a result of running your business. Those are clearly supporting information that gives credibility to the business. Or it could be that you've acquired new certifications for your business. Maybe now you're ISO certified. This just give credibility to the business. Those are what I call appendices in there, because they help support the fact that you know what you're doing as a business and somebody else should invest in you. Then you go into, why do banks want to know about your plans? I think even as ourselves, if you want to give money to somebody else, you want to know first of all, who are you, And that's why I'm talking about all this information that you need to provide, because I want to know who are you, right? And then for a business, I also want to know, is your business viable? Will it be there tomorrow? You've asked for a loan for 10 years. Will your business last the next 10 years? So I'll be interrogating what are customers' tastes and preferences changing over the period of the 10 years, such that if what you're then asking for maybe in another 2 years is going to be obsolete, it means you're going to have a problem. And therefore, we need to have that discussion in advance. And that's why we always ask, is your business viable? You'll find some entrepreneurs have actually invested in research to understand the trends that will be there in their business, and therefore they're able to talk fluently around this particular point about the business being viable. But at the end of the day, if you're selling a product, the customers are the ones that will determine whether your business is viable, because they'll keep coming. Exactly how much do you need and for how long? I can't overemphasize that enough. I think I've talked about it. It's very important that you know that, and that you've done your homework. You have almost like 2-3 pro forma invoices of what you want to purchase, or you've done some homework around where else can you find the same product. That normally helps. And if somebody comes to me with that kind of readiness, then I know they've really been thinking through what it is that they want to get financed, and that they're going to make sure that they put it to proper use. What can you bring to the table as your commitment is one of the things that we talk about. And sometimes you don't actually have, your business is what you have to bring to the table. And it could be in forms of the contracts. Maybe you have pending contracts that have not been paid, and therefore that could be what you bring to the table in terms of the receivables that you have. So that discussion, when you bring the documents, we are able to see what can we use to show your commitment, because it's really about the commitment in the business, delivering in over the period of the facility that you're requesting. And then where will the money go? And it's really about detailing the different areas in which the money will get used to do. And then how will it benefit the business? Important for you to think through that. It will either increase my sales, or it will reduce my costs because it will bring in new efficiencies, or it will help me break into a new market, or it will help me increase the value of my products, or it will help me increase my production line. Those are all things that you need to think about, how what you're requesting for will add as a benefit to your business. Important to think through it as well, because sometimes as entrepreneurs, you could find there's a different opportunity. So you could be running, and I'm just giving examples here, but some of them are actually live examples. So in Kenya, we had a season where everybody wanted to keep quail chicken, and therefore that was not their main business. So you find they're probably running a taxi business, but because they've had that quail chicken is going to get them more money, so you remove money from your main business, which is taxi, to invest into the quail, and it didn't last very long. So important to understand how that benefits your current business. It could be you're getting into it short term and you have a very clear exit plan. Very good for the financial to understand how you have thought through how it benefits your business. When and how will the money be paid? That's why we need the projected cash flow, so that we know how you have thought through how you're going to repay the money, as that is very important. What if the business fails? Have you thought about, have you insured your business, or what's the plan B if your business fails? That's really what the bank wants to know. Is there a plan B? Is there an exit route? And that's why sometimes you might find that if you only have one major customer, and that is what is contributing 90% of your sales, you could be viewed as more risky, despite the value of that one customer being a lot more than the one who has 10 different customers. Because the risk with 10 different customers is that you've diversified the risk to 10 different people. But when it is just one customer, it means if something happens to that one customer, then really your business is at a standstill. So it's important to really have thought through what's plan B if this doesn't work. And then if the business is legal, we always say as a financier, you want to concentrate on the core business of providing money, not being able to police whether the revenue authorities came to close your business because you probably were not paying your taxes. We don't want to worry about that as we finance you in the business, because when we finance your business, we are really partners in that business. We almost have a stake in that business, but we don't want to be micromanaging the business, so to speak. We want to let you run your business and have peace of mind as a financier that it will continue to run, and that we've minimized the risk of it being closed down because it's not legal. Then in terms of what we are looking for, I've alluded to a diverse customer base. If there's really no diverse customer base, we just need to make sure that we've covered all bases in terms of the current customer that you have, and how healthy is their commitment to you in terms of their finances. They will be able to keep paying you on time. That's important to us. And then just growth potential in your business, that your business is going to grow. It's not going to be stagnant. There is opportunity. It's really about opportunity when you think about the growth potential for your business. And then stable sales or seasonal sales. And this really helps us understand how to structure the repayments for your facility. If they're stable, then you can afford monthly payments. If they're seasonal, then probably I need to give you a payment every 3 months. So when we talk about how stable are your sales, it's really about how do I make sure that I'm not straining your business as a financier or asking for what you cannot be able to do. So it's really a conversation around making sure that whatever financing that is given is able to meet the needs and is comfortable for you as an entrepreneur so that you can run your business comfortably. And then credit history, timely repayments, that's what we're looking at when we're looking at your track record documents for other facilities that you've paid. And it doesn't mean that it has to be timely repayments all the time. As long as you can explain, maybe there was a season, especially with flowers, there are times when the season is low, and we understand that, and it can affect your repayments. It's just about keeping track of that conversation and being able to explain what we are seeing in the information that you've provided to us. Then got good business experience. Again, the more experienced you are, the better the risk is, and that's where you have leverage in talking to your banker about reducing your interest rate if it's possible, just based on how much experience you have and how well you have built your business. Character is very important. We always look for your willingness to pay, right? That's just that. We are looking for, are you willing to pay? If we give you the money, you're willing to pay, because we do have some entrepreneurs who are not the ones listening to me today, who actually are not willing to pay at the end of the day. They want the money, but they do not intend to pay. So this is one area that we look through the conversation we have with you and the documentation that you give us. And then in terms of just from your financial statements, we are looking at what are the committed payments. Sometimes as entrepreneurs, we are juggling many things. You've forgotten that probably every month you put aside money for your children for school. So we're able to pick this out and be able to tell you whether you can afford the loan or not based on the cash flows and the way we see you operating your accounts. Whether business will generate cash to pay, alternative suppliers, are there alternative suppliers available? That's also what we're looking for. Important that you remain in business for us to be able to continue to finance you. And then just your payment terms, your marketing costs. Of course, I talked about this, so I really don't want to get into it more. Then my next slide is about just the acceptable forms of commitment, which I can just brush through because we talked about them. It could be either you have land or buildings, or you have company assets, or you've assigned receivables. These are all types of commitments that we accept as bank. Or you have that party security, which is really either a friend or one of your relatives that is willing to put in their security to support your business. Then the interview, which is really, I'm really getting into the close of the presentation, is do be confident. And that's really about, I'll get to the top attitude. Be confident around your business. You know it, and you've been doing it well for some time, and that is why you're coming to look for financing. That's very important. You really want to give money to somebody who you know they know what it is that they're doing. Know your business plan inside out. Any questions you're able to answer them. Let someone else read your business plan and try and see if there are any bases that you've not covered. And then put yourself in the manager's shoes in terms of how you present yourself. And maybe sometimes we have people who ask too many questions, and sometimes, or maybe you come in and you have so many interruptions. Prepare yourself for that meeting because it's an important meeting. Let's say in the next Speak with Confidence, I've put in a quote there by Professor Albert Merabian about 55% of communication is through body language, that 8% is through the tone of voice, and 7% through your actual delivery. So important to think about this as you have the conversation around the finance that you need. This is really about what it is that we are able to offer in Kenya, and I do know you're going to get this presentation available to you, so you can go through that in terms of what we're able to do. We offer unsecured lending up to 10 million shillings. Currently, we're doing invoice discounting up to 50 million shillings unsecured, and the interest rate is really capped in Kenya, so I've put in the Kenya interest rate over there. Your contribution is really the documentation that you come with to the bank, and we've talked about this at length. So that information is very important when it comes to giving information to the financial. I've put in there different solutions from the bank, really for you to go through at your time, since you're going to have access to this presentation, different solutions that the bank is able to offer. Because I do find as an entrepreneur, you come with one need, but really you need something else. So once you talk, I'm able to say, this is what you need. It's probably not this, it is this. So I'm able to say, is it an LPO financing? Is it an invoice discounting? Is it a short-term loan that you need, or a bridging loan? Is it a letter of credit? I'm able to, as financials, we're able to advise the type of facility you require. But it's also important for you to understand what is available for you, which is what I've detailed out there. I think an area where financials are increasingly looking at too is, what more value can we add? Can we offer advisory services for you? So that's other areas where we're looking at supporting entrepreneurs as they go into this journey to grow. So really, my last slide is around again, what I said from my experience is a business that is well managed. From an entrepreneur perspective, you're passionate around your business, you want to grow your business, and therefore every day you're increasing your business knowledge. So I believe yourselves who are listening to me, definitely you want to know your business. So that's already a hallmark of a well managed business. You are consistent and you know your plan. So your product is not different the next day. It's always the same, which is very important when as you deliver to your customers. You keep records, very important, and can account for your cash. You're involved in the running of your business on a daily basis. There's really no other person that is best placed to run your business other than yourself. Then they know their competitors very well and what differentiates them from their competitors. So you will know if it is just a simple service. Probably it's the way you've trained your salespeople to talk to your clients, and that is what really differentiates you. And then you know about the emerging trends in your business and your customers. You pay your taxes and you have very friendly staff, because really your staff will tell how you treat them, and they will want to make more money to you. So I believe that's the end of the presentation around the access to finance. I hope you found it useful, and I'm happy to answer any questions you may have. Thank you.
Wonderful. Thank you so much, Susan, for the very informative webinar. If anyone has any questions, please use the chat box at the bottom right corner of your screen, and Susan will be happy to answer them. I'm getting a lot of thank you messages. Susan, the feedback is very, very positive. Yes, we will be sharing the slides with everyone after the webinar.
Yes. Yeah. So I see a question there around whether we can finance an e-commerce business. Yes, we can finance an e-commerce business. We just need to make sure, because I think everybody has gone digital in the way that they're running their business. As long as you are keeping your records and can provide the information that I've put in on my presentation, we can be able to finance you.
There is another one, Susan. Is the facility available in Ghana?
Yes, the facilities are available in the Barclays, Ghana.
Any other questions, ladies?
I think I see a question there around our clients in Kenya who want to import from us. So if you have a client in Kenya who wants to import from you, meaning you're operating from outside Kenya, we are able to get into an arrangement for a letter of credit. where then it safeguards you as the supplier, and it also safeguards your client here in Kenya. So yes, we are able to review that.
Okay, there's another one from Cindy. Do you only do debt financing, or is equity an option through you or your partner organizations?
So for banks, we primarily do debt financing. If you need equity, we can always refer to some of the equity organizations that we do not necessarily work with, but our clients. I mean, as a good financial, I always keep a record of who can give you equity. So you'd need to get in touch with us, and then we can recommend.
Is it available for Indonesia?
Uh, I'm not sure about Indonesia. I think from an Africa perspective, the banks that we have as Barclays branches in Africa, we're able to get that access. But in terms of documentation, I don't. It doesn't matter where your business is running from. Most of it is generic. They might require the same type of information. The terminology could be just maybe slight documentation, because it's really documentation to prove that your business is running is sort of the same. I see a question here around, do you finance really small businesses
Yes.
that would require as little as 50,000 shillings? We do that as long as you have been in business for 2 years. And in this regard, I would imagine the 50,000, you wouldn't want it for very long. So we would offer it on a short-term basis. Sometimes we even do excesses up to 10 days where we allow you to overdraw your account and then you pay us back in 10 days. And we also do have a Timiza platform where we are lending from a Barclays Kenya perspective. We are lending on the mobile app, and you can access as little as 2,000 shillings in that perspective.
Thank you, Susan. A couple of similar questions. Do you do LPO financing?
Yes, we do LPO financing. We currently for Kenya, and I must say this is really for Kenya. We are doing unsecured LPO financing of up to Kenya shillings 12 million. And yes, you can access financing from Barclays Bank of Kenya. I think the ones in Kenya, today we have launched our Wezesha Biashara na Barclays campaign. So we are going to all business people and letting them know that we are offering financing. So just get into any of our branches, they'll be able to support you.
Another one from Morissette from Central African Republic. Do you finance for a non-profit NGO?
Where they are allowed to borrow. It's really about, remember I talked about the documentation we have and whether it allows you to borrow or not. So that's what we normally look at. And then we would look into the contracts you have with your donors to find out whether they allow you to use their money to pay a loan. So very important to review the contracts when we think about financing for NGOs. I've seen a question around whether you need to open a current account for us to access financing. When we're reviewing for the finance, you don't necessarily need to have had an account with us, because what we're looking for is for the track record of the business, which you could be having with another financier. But at the point where we are financing you, then we need you to open the account with us so that then the payments can be coming through your account and your sales can start coming through your account with us. I think I see another question around Nigeria. We do have some aspects of the financing available there. But I do know we don't have a Barclays in Nigeria.
I'm just browsing through the questions to see if there is anything else. I think we have a follow-up question from Preeti Bedi, who asked if this can be recommended to her facility available, no, sorry, to her clients in Kenya.
Yes, you can recommend to your clients in Kenya. Yeah.
And she's asking if we need to open an account for that.
yes, they need to open an account, and I have put in my email address there. So once you get the presentation, you can be able to email me.
I just have these will be the last two questions, everyone, because we are really pressed for time. Uh, First from Ella, what kind of finances do you have available in Nigeria? Hello.
Um, we currently do not have another partner bank in Nigeria. But I believe there must be a financial there because I've really tried to tailor my presentation around what most banks would be offering. Because really the differentiator for banks is the service, how we offer the service to yourself and how fast we are. So the same sort of facilities should be available with a different financial.
Wonderful. The second one is from Morissette from Central African Republic. Is it possible that my business in CAR opens an international bank account in Kenya with Barclays?
CR is CR Congo?
No, Central African Republic.
Okay. Yeah, yeah. Yes, it's possible.
And the
The only
last,
the
sorry.
only thing is if you're a business constituted in a different legal jurisdiction, meaning country, then you need to have yourself register within the Kenyan jurisdiction for us to be able to finance you. I hope that is understood. It's really around legal requirements for each country for your business to be legal, considered a legal entity in that country.
Wonderful. And I just have a last question from Nancy asking, do you have asset finance if she wants to buy a truck?
Yes, we do have asset finance, and for Kenya right now, we are running a promotion with the dealers where we are offering up to 95% financing for up to 6 years for trucks. So get in touch with us.
Excellent. I think that is all, Susan. Thank you
Okay.
very much for the very, very enriching webinar. And thank you to everyone who joined us today. This was the second webinar in the Barclays Bank Kenya series, and we will be conducting a series of webinars till the end of the year. For more information on all webinars and capacity building activities, stay tuned on SheTrades.com. Susan, any final words from you?
Oh no, thank you very much for giving us this opportunity to add value to your businesses. As Barclays Kenya, we are committed in this market, and we'll soon be launching some products that are specifically tailored for women. So watch out for that. And thank you.
Excellent. Thank you, everyone. Have a great afternoon. Bye.
Bye.